The two LTROs were conceived and designed to make sure that also small banks, which are also the closest to the SME, could have access to that, and so that we could take this money closer to the SME. We are not sure that the SME actually got this money. We are only sure that it's now closer to the SMEs. Why is that? Well, first of all, because you need time. You need time. You create central bank money. Before the central bank money translates into actual commercial bank money, or M3, you need time. Second, banks don't lend essentially for, I would say, 4 reasons. The first is that they don't have money. They don't have funding. And we took care of that. That's certainly. The second one is they don't have capital. And we cannot take care of that. The third is risk aversion. And to the extent the risk aversion depends on the perception that the counterparty doesn't have funding, we have taken care of that. But if the risk aversion perception is one where you have the sense that your counterparty doesn't have capital, we cannot take care of that. But the fourth reason, and it's really perhaps one of the most important, is demand. You have credit if you have supply, but also demand. We cannot take care of demand other than through the very low level of short-term interest rates. Much of the growth coming in countries that are now experiencing a fiscal contraction would have to come from supply reforms. And this drives me straight to the labor market issues and the youth unemployment. The youth unemployment has several reasons for, and I don't want to dwell on them, but certainly it's most developed and it's highest in countries that have had in the past a so-called dual labor market, where you had one section of the labor market which had all the protections, and another section of the labor market, namely the young, which were basically hired always on a very temporary short-term basis, had no protection basically. So with the crisis, they were the first to remain without a job, which basically says that these countries have to have a reform of the labor market, which not only would free energies, but also would distribute in a more equitable way the weight of flexibility, which is nowadays fully concentrated on a young part of the population. We look at the consolidated bank balance sheets country by country, and we see whether this liquidity creation translates itself into first deposits. It can translate into deposits either because the banks buy securities, government bonds, buildings, or they lend money. So we see that, we look at that. And then if we are to observe that deposits grow and lending grows, we'll also observe later also an increase in the so-called required reserves that we can observe in our own central bank balance sheet. But otherwise, we have to look at the consolidated bank balance sheets country by country. And you can imagine, we look at them every day.